Stock market of the Nigeria Exchange Limited yesterday rebounded from the previous trading session's loss as the benchmark index rose by 0.14%, attributable to investors' interest in Seplat Energy and 24 others. The NGX All-Share Index increased by 64.77 basis points or 0.14% to close at 47,272.04 basis points. Similarly, the overall market capitalization size gained renewed 35 billion naira to close at 25.4 trillion naira. Accordingly, the stock market month-to-date and year-to-date returns increased to 1.4% and 10.7% respectively. Performance across sectors was mixed as the NGX Oil and Gas added 3.9% and NGX Insurance also gained 1%, while the NGX Consumer Goods dropped by 0.6% and NGX Banking declined by 0.3%. Elsewhere, the NGX Industrial Goods Index closed flat. Now we'll look at the stock market summary for yesterday. We see the all-share index closing at 47,272.04 basis points. That's a 0.14% increase, while it had 5,383 deals. That's an increase of 22.98%, and the 340.67 million volume traded. That's an increase of 47.7% at 3.86 billion. That's the value, an increase of 10.44%. And the market capitalization closed at 25.48 trillion naira, moving up 0.14%. And now to the top 5 gainers of the day. We see the e-Transact closing at 2 naira 42 kobo, moving up 10%, and Len Africa closing at 2 naira 66 kobo, moving up 9.92%. Square closed at 2 naira 58 kobo, an increase of 9.69%, while Royalex went north 9.62% to close at 1 naira 14 kobo. RTB Risco closed at 0 naira 86 kobo, an increase of 8.86%. All right, now let's bring in Ambrose Omodion, our analyst, to take us through what happened at the market yesterday. Ambrose Omodion is CRO, that's the Chief Research Officer at Invest Data Limited. Thank you so much for joining us, Ambrose.
Thanks for having me again.
Now, the stock market yesterday rebounded actually from the previous trading session loss as the benchmark index rose by 0.14%. And of course, this is attributable to investors' interest in energy stocks like Seplat. And perhaps this has created a sort of winning for some markets around the globe. Is that what you expected to see after the close of markets?
Yeah, as I said today, when I was discussing, I mentioned that crude oil price crossing $100, been around 101 as at yesterday, that it will be a driver for most of the market around the globe. But the good thing is that the trend in the market is changing as volatility continue, and also the global trend as regard the political tension in the Ukraine and Russia as a result of the invasion. That also called for a lot of concern and change in strategy in trading, because there are some sectors actually, as I've said earlier, will benefit from this happening, this tension. As crude oil price is going up, how far it will go, it depends how long this tension will last. For that, many investors are kind of taking their portfolio and focusing to the sectors where they are happening now, because those companies in that sector, because of this movement in oil price, they are bound to work to perform well. Even as you see, they expect their Q1 results and going to it, because nobody knows how long this tension will last. As far as it continues, oil price continue to look northward. For that, investors also changing their trend. But for me, one thing is very important is that the market yesterday showed that our market also looking forward to the trigger. The previous day market was down marginally about 0.8 negative, but yesterday, they returned up around 0.14. But to tell you that the market is still quiet. The market is there because the market is trending. Market has not made a lift up from where it is now to down because the strong resistance level of the market is 47,335,000. These are the market is around the 47,279 points. Then the market is waiting for the market breakout is 47,335. That is why we say there's a new trend. But market is and it's still very slow and not trending. For me, investors should not panic because rather market is looking for a trigger, and that trigger will come when the big names in the market start releasing their solicited accounts with their corporate action. And don't forget that because of the new rules in the market, most of them are taking the option of releasing their number within 50 days. Because if you use the number before the end of January, you will have between now and end of 31st March release. But those that do not, that means we expect those big names between now and 1st of March, which is by next week. And if it comes at once, going to add momentum to the market and going to bring more liquidity to the market. Because as market is challenging now, no institutional investor is playing the market because market has no direction. And when market has no direction, it is no institutional investors, most of them they suffer because they don't know where the market is going. But that is why firms are not entering the equity market as before. Because the market is on the side movement. Until it keeps up trend or that trend, so we'll not see more coming in. I think with these numbers we expect a lead out of where the market is now, either up direction or backward. That is coming in next move. So any investor that is the right stock and still expecting earnings from this company, the whole of dividend, do not panic at all, but rather
Let's take a look at the impact of the Ukraine invasion, which had started on Wednesday night. It is probably taking the world by surprise, but what instrument is more of a safe haven for investors' fund, both globally and domestically?
Actually, this is time to look for kind of diversify your portfolio, or because I will tell you that it's at the time that has a 50-40 portfolio arrangement. It will cost too much now because I'll tell you, even our market here, the bond market is not moving well. For that, if you are doing that means you can also increase your portfolio to either 80-20 because equity market is where we are seeing high yield now compared to bond market. But for those and also in the mature market, I think what they do now, most of them will use equity to bond because most of the mature markets are already down because of the fear. But there was a rebound yesterday because most of this market in Europe are also doing their investment in like US. I think the US market rebounded yesterday because first fund enter US market. For our here, it might likely also be the same. If also those in Europe that where they are trouble, they decide to bring their investment out of that zone to other African or emerging markets. You might see also a lead in the market going forward. Similarly, anything we are seeing. But this is the time for investors to play defensive by targeting those that have that defensive nature and the sector that also are defensive in nature.
Now, let's focus more on the market on Thursday. The banking sector declined 0.35%, and then this recent decline given the impressive earnings report from the sector in the last quarter. What are your thoughts on this?
Yeah, for me, it's a good one for the banking sector because it puts that investment makes most of the banking sector cheaper. And when I think the sector that I already said that the most consistent in dividend payment, I expect that the dividend will come up for that sector. For that, it's like that sector. 1% that will pull